Hola mi gente, welcome back to the channel. My name is Sean. This is We Are Investing, a channel that's dedicated in investing and personal finance. On today's video, we're going to be talking about how to spot a reversal in a stock. A reversal can be to the upside or to the downside. Let's say a stock is heading lower and lower, and you just do not know when to get into a trade. You like the company, you want to swing trade it, you want to hit that bounce. What are some things that you should look for? That is what we're going to be talking about on today's video. On the flip side, let's say a stock is moving higher and higher, and you think that the stock is overvalued and it should correct and pull back, and you can make money going short, either shorting the stock or put options or something else, a bearish trade. But you want to know, when should you enter into a bearish trade? That is also something we're going to talk about on today's video. Now, on today's video, I'm going to show you some signals, some indicators that I personally use to determine if a stock is rebounding and has caught a reversal. These signals and indicators, they're nothing special, they're not fancy, and so many people use them. That's what makes it powerful. Trends happen when traders are buying or selling a stock in numbers. If you are using a signal or indicator that nobody else is using, it's not going to do anything for you. That's why proprietary systems, proprietary indicators and signals, one of a kind, things you pay for, they're complete BS when it comes to trading. And I would never pay for something like that. Because, like I said, when you have an indicator like the 200-day moving average, and so many traders rely on the 200-day moving average as support or resistance, when they see it get to that point, they start buying or selling depending on the direction. And when you have a ton of people doing things because of a particular indicator or signal, that's when the stock actually moves. And that's why we see stocks bounce at the 200-day EMA or the 200-day MA all the time. So in this video, we are going to go over some basic examples. I'm going to show you how to use these indicators to your advantage. These are indicators that almost every brokerage is going to offer you. If you're trading on Webull, it's there. If you're trading on TD Ameritrade, it's there. If you're trading on Fidelity, on Charles Schwab, on E-Trade, on TradingView, if you're using TradingView for your charting, it's there as well. So many brokerages offer these basic indicators and signals. Now, before we dive onto the computer, I'm just going to explain some of the things that we're going to look at. The first one, being the most obvious, is support and resistance lines. These are just points where the stock has bounced before. Either it hit a point where it could not break and it dropped lower, that is a resistance line. Or it hit a point, a share price, where it was falling and it bounced and it stayed above that share price. That is your support line. Support and resistance lines can help indicate whether a stock is moving higher or lower. Because if it breaks through a resistance, then the trend is the stock is setting higher highs. If it breaks through a support, then the trend is that the stock is setting lower lows, which means the stock is moving lower and lower. When it breaks the resistance, it's moving higher and higher. Something else you should know is that prior resistance becomes future support, meaning that if a stock breaks through a resistance line and moves higher, it's going to pull back at some point. And when it does, it typically uses that prior resistance line as the next level of support. So watch for it to bounce off of that support line. The same can be said when a stock is moving lower and it breaks through a support line. So prior support becomes future resistance in this case. So the stock heads lower, it breaks through that support line, it drops below it. It's going to bounce up at some point, but it's going to use that prior support as a resistance, and it's going to be tested at that point, in which it might continue lower and not break through that current resistance. So support and resistance lines are huge, and anybody can draw support and resistance lines. You're just looking at key prices in the stock and literally just drawing a horizontal line. Some other indicators that we use to tell if a stock is reversing are moving averages. Now, depending on what kind of trader you are, you're going to find certain moving averages more beneficial to you. I'm more of a swing trader or long term investor, so I'm using moving averages that are longer dated. I'm using the 200-day EMA a lot, and that is a huge moving average that I personally use. The 200-day exponential moving average. But you can also use, and I do use these as well, the 50-day moving average, the 100-day moving average, the 150-day moving average. You can even go as close as using the 5-day moving average. There are many moving averages out there. The biggest thing with moving averages is you just want to see that the stock has used that moving average as a support or resistance in the past, and it shows that it respects that moving average, meaning that it bounces off of it quite frequently, and it actually is a good indicator. The 200-day EMA is so popular that so many investors use it and traders use it that it usually acts as a nice support or resistance. But moving averages can be huge as an added confirmation that a stock is either in an uptrend or downtrend. And what we're looking for is for the trend to break. And what we want to see is a stock that was in a downtrend show signs that it's now starting an uptrend. And we can get in then and ride the stock higher. That's the goal. Another indicator or other indicators that we use include the RSI, which is the relative strength index. This will give you a number, and based on that number, you'll know if the stock is oversold or overbought, which will help us determine if the stock is about ready to bounce or pull back, depending on what the RSI is telling us. Another thing that we look at is the MACD for an added confirmation that the stock is either pulling back or rebounding. Those are two indicators. They're lower studies that I show on my chart to help give us an added sign of confirmation on the direction of the stock. Now, something that is crucial with all of this is one indicator is not going to give you enough information. Just because the stock is above the moving average doesn't give you enough information. You want to try to combine as many signals, indicators, studies, whatever you want to call them, as many data points as you can to confirm that the stock is rebounding and you found a reversal. The more the merrier, the more confirmation points you have, the higher the quality of the trade is going to be. And we want to find high quality trades. Because when you find high quality trades, you're not going to be pissing away money on horrible trades that are going to lose you money in hopes that you just find one lucky trade to make up for all the losses. If you can minimize your losses and enter into high quality trades, that's when you become a successful trader. So with that being said, those are the three main things that I look at. We're going to put them into action. We're going to head on over to the computer so that you can see for yourself how to use these signals, indicators, studies, whatever you want to call it, how to spot a reversal. So with that being said, let's do it. All right, mi gente, let's dive into it. What you're looking at right now is my TD Ameritrade screen. This is my basic workspace where I have one stock but four charts. And this will provide me a ton of information. But this might seem very confusing to you at first. No worries, we're going to dive in and I'm going to explain this because it's really not that confusing. It just takes some explanation. So what we're looking at are four separate charts, but each chart is different. It's a different time frame. Each chart, they all have candles, but every candle represents a different duration. The chart over here, the main chart, is a 1 year, 1 day chart, meaning that each candle, if we zoom in, represents 1 day. So for this day, which was September 20th of 2021, the stock had a high, or this index had a high of $15,338. It had a low of $14,807. Anyways, each candle represents 1 day. Why is that important? Well, because a candle that represents 1 day is going to have way more weight, is going to have much more weight than a candle that represents 1 minute, which is what you see over here on the top right. This is a 1 day, 1 minute chart. So every candle represents 1 minute and the time frame is 1 day. Below it is the 20-day, 1 hour chart. So each candle represents 1 hour. This one I kind of flip between the 20-day, 1 hour and the 5-day, 15 minute, but we're going to keep it at the 20-day, 1 hour. And the chart down here, which is also very, very important, this is a 3-year weekly chart. So each candle, when we zoom in, represents 1 week. So a support on the weekly chart is going to hold way more weight than a support on the 1 hour chart. Let's zoom back out and get to the base. Let's zoom back out, and here's what we are started with. Now, every color, now what we have on the 1 day, now what we have on the 1 year, 1 day chart is we have moving averages shown, we have the MACD, we have the RSI, and then I have a custom study called IV rank, which essentially just gives me the IV percentile, which we're not going to talk on which we're not going to talk about on today's video because this has to deal with options and premiums. But the first part that we're going to talk about are support and resistance lines, and something that I forgot to mention earlier in this video, trend lines are also very important. So what I personally am using here is you can see that I have some white support and resistance lines, and I also have some white trend lines. White represents the weekly chart, W for weekly, W for white. So what I do, and I can zoom in on a chart that's the weekly. If I go to the 3-year weekly chart, which I'm on, I'll draw support and resistance lines. So as you can see, this was a resistance at around 1,000, at around 10,000. This was right before COVID. So this was the peak before COVID. There's also a support here, but I don't have it drawn. Let's actually add it to it. So we're going to duplicate this drawing and then move it down. So that is a support line. We also have a support slash resistance. The stock bounced multiple times at this level. It was a resistance. It broke through it. It bounced back down. That prior resistance becomes future support like we talked about in this video. So then it bounced off it again. It went back up. That was another resistance. It did not break through. So it tested that support line again and it bounced and ultimately broke through that resistance. We also have another resistance here at these two peaks. And then we also have a trend line. So you can, as you can see by these two white lines, the NASDAQ was moving up in an upward channel. It bounced here, it bounced here, it bounced here, it bounced here. It tried to bounce here, but then it was rejected and then it broke trend and it kept on selling off. It also had an upper trend line as well, acting as a resistance. So here's the start of it. It broke past this a little bit, but ultimately broke down, did not pass it too much. It bounced off of here again, it bounced off of here again, and then it bounced off of it right here ultimately, and that was the top. Heading back to my flexible grid with my 4 charts. So white represents the weekly chart. Green represents the daily chart. D for daily, D for dinero, which is green. So green represents the daily chart. And as you can see by this, we did have a downward trend because the NASDAQ, the whole stock market, has been selling off very, very quickly. I also have this gray here. Gray represents the hourly chart, and it was the low where we bounced a couple times in the hourly chart. H is for humo, which is smoke in Spanish, and smoke is gray. So that's why I use gray for the hourly. And I won't keep these on my charts for too long because an hourly support or resistance doesn't hold a ton of weight. But what we got going on right here on the NASDAQ is actually very, very interesting, and it might be reversing. But there are a few more things that we want to see happen with the NASDAQ. And this is a great example for this video because we're going to go over multiple things. And later down the road, we'll see if the NASDAQ actually rebounded or if it failed at this resistance, which we're going to talk about next. Ultimately, depending on how late this video is being watched, NASDAQ is going to be higher because stocks typically go higher in the longer period of time. So what I want to talk about is the 200-day EMA, which is this light blue moving average. Now, as you can see by taking a look at this chart, we're approaching that right now. Will this act as a resistance and the stock is going to pull back, or the NASDAQ is going to pull back? Or will we finally break above that 200-day EMA, and that's going to be future support, meaning that we're going to continue above that line. We're going to stay above the 200-day EMA because we got two confirmations of a rebound, and that was based off of support and resistance lines and the trend lines. If we take a look at this hourly chart right here, and we have that green trend line, the trend line of the daily, you can see that we broke above it. We also broke above a resistance here. Let me duplicate this drawing for the gray right here. When we broke above that, we consolidated and we also moved higher. So now we're above that resistance line. We also broke the trend and we are approaching the 200-day EMA. What's going to happen next? Well, I personally would not get into a trade right now. I was buying as we lower lows, but I wasn't trying to time anything. If I was trying to get into a short-term trade, I would wait for confirmation that we break the 200-day EMA. We'll do something like this. I'll draw it on my chart. We'll do something like this. We'll break the 200-day EMA, then we'll ultimately bounce back again, test that 200-day EMA, and then move higher. Once we actually test it and it holds and we bounce, that would be a good time to enter into a trade because we got multiple confirmations. We got confirmation that the daily trend is broken. We got confirmations in the support and resistance, and we're also holding above the 200-day EMA, another sign of confirmation. And at that point, we can also take a look at the lower indicators. We can take a look at the MACD to see if we get above the purple line here, the middle line. If we are above that, then we are bullish. Take a look at the last time we crossed over that middle line. It was right here, and the NASDAQ obviously moved much higher. That was a nice run. If you got into the NASDAQ at around 15,300 bucks and rode it up to 16,750 bucks, that's a nice little trade, and that's when it crossed over on the MACD. The same thing can be said on the downside. When it broke below the MACD, the price was around here at $15,550, and it broke all the way down to below $13,000. That corresponds to when the NASDAQ broke below on the MACD. In addition, some things that you can use are the RSI. For instance, when the stock or when this index got oversold and we had an RSI of below 30, that corresponds right here. We did have a little bit of a rebound. But ultimately we followed the same trend and we headed lower. And then the next time the RSI flirted with an RSI of 30 was right here at that prior low, which was sub 13,000 on the NASDAQ 100. And then one other time that we got low on the RSI was right here when we bounced from around $14,400 to a high of $16,767.50. So that again would have been a nice trade. But like I said earlier in this video, you cannot just go off of one indicator, two indicators. You want to use many indicators, many signs of confirmation that you're entering into a high quality trade. And for me, that would be that we see this major index, the NASDAQ 100. We're looking at the futures for this, hold above the 200-day EMA. All right, mi gente, that wraps it up. I thank you so much for your time. If you want to join the community of over 500 investors and you can see what stocks I am personally buying and selling, what options I am personally buying and selling, then you can join the Patreon by using the link down below, and I give you access to a private Discord server of over 500 investors. It's a community where we learn together, grow together, and make money together. Also, don't forget to hit that subscribe button, ring that bell, and smash that like button, and I'll catch you all on the next video. It's been real. It's been fun. It's been real fun. And this is We Are Investing, and together we are invincible. See ya.